Hello, Vol investors. Thank you for joining me. My name is Michael from Deep Value Returns and Seeking Alpha. Today I want to talk about the trade desk. The trade desk has been a volatile stock in 2021, and I want to talk about the pluses and minuses that investors have to think about. So let's just dig right in. So one of the things that I noted when I wrote the article about the trade desk, a bullish article about the trade desk back in June, is that I said the stock is down 30% this year, and anyone that is anyone already knows that there is a fact that there is some overarching pessimism facing the stock. So I kind of made the case that, okay, yes, there is a lot to be concerned about here, but you're probably already kind of pricing in a lot of that pessimism already. And in the past, since June, the stock is up 9% versus the S&P that's up 3%. Now, I'm not making the case that when the stock is up 9% in 4 months that, that's like a great return. The point I'm trying to make that it's important to think about how the return of the investor comes about. So the return what I talk about to people is that the return of the stock is not made in the buying or the selling of the stock. The return is made in the holding period. You make the investment, you let your return compound over time alongside the growth of the company. So as the company grows in intrinsic value, you as the investor will grow alongside it. That's what you want to try and do. You want to try and buy a stock when other people don't want to buy it, and you want to hold it. So I've got a 5-point checklist that I wanted to share with you, and this is some things that I look forward to. So I want the business to be growing. Okay, that I don't want to be compromising. I want its path to profitability to be improving over time. That I don't want to compromise. I want to see its gross margins either flat or improving slightly. This is up to discussion, what kind of puts and takes you look towards in the gross margin. I like when it's led the business by a founder that has at least 5% of the stock, owns at least 5% of the stock. At some points, at a certain price, I can compromise on that. But I want also the price to sales multiple to be kind of close to half of the growth rate. In the case of the trade desk, this isn't really something that the trade desk has, and this is something that we'll come and discuss in a second. So the trade desk is growing at a reasonable rate, and you can say, okay, yeah, so Q2 will grow at triple digits. Michael, that's not really a reasonable rate, it's a very fast rate. Yes, but Q2 of last year, revenues were down 13% year over year, so it was going to always be an easy comp to come up against. What investors care about is how does the guidance look going forward? What should investors be thinking about going forward? Can the trade desk grow at 30% compounded into 2022? So that's the thing, right? So analysts following the stock, you can see in the green arrows here, they're expecting that once the trade desk goes past that difficult comp of Q4 21, it's the upcoming quarter, once it goes past that its revenue growth will accelerate once again. Now, that's what analysts are thinking. Analysts are thinking that the trade desk can overcome all these privacy changes and that this will lead the company to once again come close to that 30% compounded annual growth rate. Now, investors on the other hand, you can see here the volatility. The investors have been really kind of unsure of how this is going to play out. You can see just how volatile, and this, even the hardest, most passionate trade desk shareholder would have kind of had some tribulations here when the share price is so difficult. It's difficult to kind of get really bullish and behind the company when the market is kind of just so volatile for the company. But the trade desk hasn't been alone. So if you look, I could put out 2 comps here. So if you look at Magnite and Pubmatic, these 2 companies have also kind of down since the start of the year, approximately 15 to 20% in that range. So investors are just quite pessimistic towards this type of sector, digital advertising in general, and I believe that anytime that investors are pessimistic, there is an opportunity to be had. Now, before we discuss this valuation, what are investors concerned about? Investors are concerned about how will the trade desk or these digital advertising companies manage without the first-party data, because first-party data is a big thing. If they cannot track you as a consumer, they have no idea what type of adverts to target you, and that becomes something that advertisers don't really want to do kind of mass advertising. They want to do targeted advertising. So then they go to other platforms that does hold first-party data, and that's something that's been overhanging the stock for some time now. Now, the trade desk is priced at 21 times forward sales, and you may make the case, okay, that's not very, very cheap, Michael, and I get that, but you have to think about first, the trade desk's EBITDA margins come up close to 40%. That typically means that if you're getting $1 of revenue, 40% drops to the bottom line as EBITDA. Next, it hasn't got a lot of capex requirements, so what you see is pretty much what you get. And finally, just wanted to say one more thing. So if you think about it, the multiple that investors are paying for the stock is down significantly. So from if you look here in late December 2020, investors were paying 40 times forward sales, and now this has dropped to 21 times forward sales. So practically halved. So you could make the case, okay, yeah, but back in COVID crash, it was really like below 10 times forward sales. But back when COVID crashed, the multiple had really compressed because investors were really, really pessimistic. And when you look at the share price right now, I would make the case, yes, investors are also quite pessimistic, and that's why the stock is really, really cheap. In any case, so if you want to find out what kind of stocks I'm interested in, and you're welcome to check out the reviews that I've got from my marketplace on deep value returns. You're welcome to come in on board and get involved. And if you just wanting someone to help you think about investing and put you and create the right framework for you, or you haven't got really time or inclination to pick out and do the due diligence on high quality actionable investments, then check out my marketplace called Deep Value Returns. Hope to see you next time. Bye bye.